Welcome to the New York Professional Spotlight. Host Roman Kirzhner sits down with successful professionals from across New York to uncover the stories, strategies, and expertise behind their achievements.
Well, hey, welcome back, everyone. Today, it is my pleasure to be interviewing a very accomplished real estate investor, what I call a real estate entrepreneur, Mr. Roman Kirzhner, zooming in from beautiful New York City, New York. And Roman has a lot of experience in what's called multifamily investing. In other words, investing in apartment buildings. And he is one of the main operators with Veles Holdings. And he's also the host of the new podcast, the New York Professional Spotlight Show. So, Roman, welcome to the show. Great to have you.
Thank you very much, David. Thank you for having me on this show and this podcast.
My pleasure. So, Roman, I kind of gave a little brief overview of what you do, but maybe let's dig in a little bit more and let's talk about why, what kind of real estate you're investing in. What Veles Holdings looks like right now.
Absolutely. I am fascinated by the business that I'm in. I'm doing it 24/7 for the last 8 years, and I've been always involved in real estate because I like this type of business and I like investment in real estate, as many people before me and after me start with single families and kind of straightforward business. But 8 years ago, we switched from single family to multifamily because on this product and this type of assets, you can scale up your business, and that's what you can generate. You can generate sufficient income for you and your family and your future generations as well.
So what does the portfolio currently look like at this time, Roman?
Our portfolio always changing.
Yeah.
We're trying to keep not a lot of units, but averaging between 120 and 150 units at any given time. And that's just not a magic number. It just happens to be because we're trying to create conveyor belts, fully recycling any investment that can bring money to our investors and to us, of course.
Okay, very good. So what are the kind of properties, what size of apartment buildings are you guys typically looking for?
Our specialties, and we feel really comfortable in properties like small to mid-size multifamily investment, meaning between 20 units to, let's say, up to 100 units at any given times. It can be single building. It can be any complex buildings that
Like a number of properties all combined. Okay.
Yeah, it's under one contract basically, and it shouldn't be scattered throughout the country and throughout the city. It's for convenience and probably for better management anyway.
Yeah.
What we're looking in terms of the properties, we're looking for properties age of vintage. We call it vintage, 1980 or younger. We're looking for the properties.
Wow, if that makes me feel really old, man.
Same here. Same here.
Okay, but so 1980 or newer. Yep.
Right. A newer for simple reason is the same like as a people. It takes a little bit more maintenance if you're older.
Yeah.
And you have to look at a lot of money to manage that property.
Right.
And we're looking in so-called C plus type of areas. We're looking
C plus. So what does that mean? C plus.
It means basically working class area that provides services. People engage in any employment that they have. And we're trying to stay away from internet employment because it's not stable at this point. We're trying to be in areas with low crimes. With
so kind of good, solid working class neighborhoods.
Solid, average American neighborhood.
Now you're located in New York City, very expensive market. Is that where these properties are, or are they in different areas?
I don't have anything in New York for specific reasons, and it's not related to the area because New York is a great area. Financially, it makes little sense to invest with a little bit of money. And a little bit of money is relative term anyway. But New York is not so-called tenant-friendly state. And the biggest problem having properties in New York, and specifically New York City, it's just the eviction law that you cannot fight with with what you have. You're not in winning situation in New York,
Yeah.
evicting people.
So
It's
it's a great place to live, hard place to be a landlord. Is that what I'm
yeah,
hearing?
yeah.
Okay, so where what states are you looking at, or where do you have your current properties these days?
Our current portfolio is located mainly in three states. Again, it's just it's not. It's a typical representation of our portfolio. We have property in Texas, we have properties in Pennsylvania, and we have properties in Illinois, which is not really a tenant-friendly state anyway. But we have
Okay.
it because we have experience in that.
Okay, very good. So, yep, that makes a lot of sense. Roman, most people when they're kids, they aren't looking ahead and saying, I really want to be a real estate investor. I really want to be a landlord. I really want to own apartment buildings. What was it that got you interested in real estate in the first place?
I like to receive money. It's called passive investment.
Uh-huh.
And passive investment is it's nice and attractive name for a lot of people, and for young people it looks boring, but it's a good boring name of the business when you can collect money and basically as investor do nothing, which is
Yeah.
great.
So when was it that you kind of realized that, or what was it that kind of inspired that realization?
I came to this country more than 35 years ago.
Where did you come from originally?
The country doesn't it does exist right now. It's called Ukraine. I'm from
Ah,
Ukraine.
yes. Yeah.
Yeah, and when I came in, I was a professional. I'm engineered by trade and by my experience. But I always was interested in real estate because it's fascinating. And I bought my first couple investment properties in New York,
Uh-huh.
single families, and that's how I started. Basically, I would recommend anyone to start in your backyard anyway.
Hmm.
But it was good enough to generate enough monthly cash flow.
Hmm.
And eventually, I sold my properties in New York and moved that money into different states.
Okay. Very, very
That's
good. So, Roman, there are all sorts of different ways to invest in real estate. People see these HGTV shows, flip this house, flip that house, or people have heard about, you know, building properties from the ground up or buying a house and holding it long term as a rental. All sorts of different ways to invest. Why have you chosen what's called multifamily or investing in apartment buildings versus
and
anything else?
talking about different TV shows. It looks all nice and glory and easy to do, which is kind of misleading.
Yeah.
But that's my take. I
Yeah.
would like to be polite. But ability to scale and leverage is laying out in multifamily. Simple reason: if you have one property and you have one tenant and you pay a mortgage and that tenant stops paying, you lost 100% of your income, and you
Yeah.
still
You're
have to pay.
100% vacant in that
Yeah, and
case. Yeah.
you still have to pay your mortgage.
Right.
But if you have 100 units and 10 of them vacant, you still have 90 units occupied and hopefully everyone else paying the
Right.
rent. So you can cover your expenses and have a little bit of cash flow on the top of it. That's the
All
reason
right. So
why
it's
leveraging.
leverage. Yeah. It makes a lot of sense there. So when you and your partners these days are looking at opportunities, you're looking at properties, you're considering purchasing something, what are some of the like non-negotiables? What does that deal what does it have to have in order for you guys to really look at it seriously?
Uh, we have couple of showstoppers.
Yeah.
Number one, area. If it's a high crime area, doesn't matter which state or which city it is, we're
Hmm.
not touching it, even though it's very lucrative to buy because the price is very low, and we know that yes, you can buy in this area. No, you cannot sell in this area.
So you
Uh,
don't want to be buying in the hood, basically.
no.
Okay.
No,
Yeah.
you can change the property, you cannot change the neighborhood. That's
Right.
the
Okay.
law.
All right. So that's number one. Don't no buying in the hoods. What's
Right.
another like real
Another
basic thing that you're
one,
looking at?
another is you have to fall in love with numbers before you can fall in love with property. So
Okay.
if you're looking at the property, let's say 50 units, and you're getting all information about the property, I don't want to take into the technical stuff, but let's say all financial information,
Yeah.
and you can analyze the property and it doesn't work out for your needs, the way how you look at the property, how you look at the business, then you can pass it because it's so many different properties. What we don't do, we're not buying other people problems to become our problems.
Okay.
That's
Yeah.
number
So you
two.
want to make sure that the numbers make sense
Absolutely.
before you get too excited about something. I would imagine, Roman, that based on your background as an engineer, you're probably pretty analytical. You're probably one of those smart numbers guys. Would that be fair to say?
I hope so. I think that I know what I'm doing. And
Yeah.
not only me, it's not about me. This type of business, it's always about team. If anyone think that you can do multifamily by yourself, you're mistaken. You have to create a team, but you're working with the team, and your skills should be complementing other people's skills. That's
Makes
important
sense.
because if four people doing the same, it's not a team.
Right. Okay. So very good. So making sure the numbers make sense. And without getting into the weeds too much there, what are the big numbers that you're looking for that really have to make sense? Like where does the rubber hit the road for you with?
Basic idea and main idea actually is we're working for investors, the investors who put their money, and we have obligation to protect their asset, their money. So we inviting people to be in this business because we are transparent. We never lost other people money, and we offer so-called preferred rate of return. So they can get cash flow quarterly, our distribution, if the property is stabilized. I don't want to get into details, but if we see that we can pay people money day one, that's what we're looking for.
All
And
right. So what I'm hearing is you want to make sure when you're analyzing a property or underwriting, as it's called in real estate, that it's cash flow positive. It's profitable from day one. In other words, that all of the income that comes in from rent is greater than all of the expenses that go out through mortgage and maintenance and property taxes, insurance, all that stuff. You want to make sure there's a nice cushion of profit at the end of each month. That's part of the way that your investors get paid. Am I understanding that
absolutely,
right? Okay.
absolutely, and it's not only from our standpoints as investors. It's also true from the standpoints of the lender, the bank who will lend the money.
Right.
They are looking for the same thing. If your income, let's say, greater than your expenses by 25%, then they will give you the mortgage.
Right.
Well,
Yeah,
that's
they're pretty persnickety that way, aren't they?
yeah, yeah, absolutely. And by the way, you have to understand that bank is your biggest partner
Yeah.
because bank gives you the most of the money and they want nothing more than other investors. So
Yeah. Well,
I
that
can
makes sense.
I
So it's kind
consider
of a little
bank
bit
as
of
my
guardrails there.
yeah, I have to pay them monthly and I have to pay my investors quarterly. That's only difference.
Yeah. 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 So a lot of people, when they hear apartment building or multifamily investing, they kind of have a preconceived notion of this. So what would you say, in your experience, is one of the biggest misconceptions people have about investing in apartment buildings?
Misconception basically, it takes a lot of time, energy, and money
Uh-huh.
to manage the property. And it's a lot of things that most people think that you have to deal with the tenants, and people don't want to deal with the tenants.
Right.
You don't want to deal with the broken toilets, arguing people who don't making stories why they're not paying your mortgage,
Your rent.
your
Yeah.
rents, and
Yeah.
all other different stories. That's the misconception.
So the misconception is that if they want to invest in an apartment building, they have to do it on their own and they have to be a landlord and they have to deal with all of that stuff. So what's the reality?
Reality is that none of us is dealing with the tenants and broken toilets. We hiring third-party management company instead of managing the property, we managing the managers. And this
Okay.
is different, absolutely different approach, and you have to select your management very, very specific, because the management is only entity that brings you money. That's why we have serious list of questions to ask and work with the management company, and selecting management company is very critical.
Yeah, very, very important. So you've been doing this for a number of years, Roman. When it comes to apartment buildings, multifamily properties, what's one of your favorite deals?
The favorite deals is actually the last one that we had
Tell
in
me about it.
Texas.
In
And it's not,
Texas. All right.
yeah,
So how many units in this Texas building?
relatively speaking, it's not the biggest acquisition. It's
Hmm.
22 units. The purpose of that was mainly to establish presence in the Texas, because a lot of brokers are not talking with any investors who are outside of the Texas or don't have
Okay.
any presence in
So you need to
multi.
get your foothold
Yep,
in the state. All right. So
exactly.
22 units, whereabouts in Texas?
We like not the primary market. We like not even secondary market. We like tertiary, tertiary,
Tertiary market.
tertiary market. I'm sorry.
Yeah.
Uh, for simple reason, by doing all that analysis, and everyone can do their own analysis using AI, using ChatGPT, using any search engines.
Hmm.
Treasury markets perform much better than primary markets. And
Okay.
talking with a lot of brokers, that seems to be holding the truth till now. And,
Okay.
and
So
that's
tell
why
me about the deal.
the deal is located in city called Texarkana.
Okay.
A
I've
lot
heard
of
of it.
people, I was surprised how many people heard about it.
Well, it's a
Uh,
very weird name, and
yeah,
I'm pretty sure it's on the very close to the border with Texas, Arkansas, and Kansas, if I'm not mistaken. Is that right?
absolutely. It's northeast of Texas, 2.5 hours away from Dallas. Uh, and it's staying on the border, main street dividing city into two states, Texas and Arkansas. They do have two city halls, which is kind of confusing for a lot of people, because when you're asking for the city hall, they always asking you which
Yeah,
part
which
of
one?
the state. And only famous place that I know about Texarkana, it's only post office that's serving two states.
Okay. All right. So Texarkana, 22 units. Why is it such a good deal?
It's a good deal because the city located in Texarkana has its own college. It has plenty of workplaces. It has a lot of health care
Hmm.
professionals. It has quite a few uh, employers related to the military.
So quite a diversified economy. It's not like a one factory type town.
Yeah,
It's got a
yeah.
wide base. Okay, that's good.
And it satisfy our needs as a first criteria in terms of population growth, uh, salary growth. So we take into consideration how much an average people making, and if they making I should say about $50,000 per year, that should be our standard salary type of things, because
Mhm.
otherwise they will have problems paying rent. That's what we're looking at.
So it fits the criteria. All right. So good diversified economy. So what does that translate to as far as this particular deal, this particular property?
This particular property, 22 units, we purchased it last year, and we introduced a small tweak into this property. That's what it makes it interesting. Out of 22 units, we have 3 units that we're using for Airbnb.
Oh,
So
interesting.
it's a kind of mixed, and I didn't think that it will be one of the biggest influencer in the property, but working with our management company and the way how they handle it, the Airbnb performs really good. We're happy with what it does. We thought that
Yeah.
we will not use that type of introduction into the multifamily, but in that was a pleasant surprise that it does work very well. And by our calculation, if Airbnb units will be occupied by 50% of the year, we covered by all year, so we're good in that.
Okay, so let me see if I understand this properly. So you've got 19 of the 22 units are rented out long-term, normal tenants, long-term
1 year
tenants,
lease, right?
year-to-year leases. Okay.
Mhm.
So that's great. And then you've taken 3 of the units, you've turned them into short-term rentals, Airbnb rentals. And the big advantage to that is it's almost like a hotel. So your average night, if you extrapolate what you charge on average per night across a month, you're probably generating double, triple, quadruple what you would having that as a regular long-term unfurnished rental.
Absolutely.
Is that correct?
It's a hotel with slight restrictions because we don't want to create environment that is not safe.
No, of
So
course not. But I'm just saying financially.
financial, right? And that's one of the idea that Airbnb will renting for not less than 7 days. So it creates professional tenants to live there
Okay. So
instead of
minimum
one night
7 day
stay.
stay. So it's not nightly stays. So
Yeah.
kind of the best of both worlds. And what is that like? If it's rented out all month, what is that? How does that compare to like the unit next door that's a monthly rental? Like as far
Okay.
as how much
If
goes?
it's rented to the whole month, let's say 100% occupancy, 100% payment, it's almost triple of the income from one
Wow.
monthly rent.
Wow. So even if it's 50% of the year, which I'm sure it's more than that, you're still getting like 50% more than you would renting that
Absolutely.
out as a normal rent. That makes a huge difference on your cash flow then, doesn't it?
Absolutely. That's one
Okay.
of the reason why we paying our investors quarter after quarter with having no problems of doing
Yeah,
that.
that's unique. That's very, very smart. So Roman, thanks for sharing that success story. Now, it's not all sunshine and flowers when it comes to investing in apartments. What's over the years, what's been one of your biggest takeaways or learning experiences, as we call it?
Learning experience, great question, because exactly in my day by day educational process, I'm telling everyone I'm not teaching people how to buy the property. I'm teaching people how not to buy the property.
Okay. You've
Uh,
learned the school of hard knocks
yeah,
has
so
knocked on your door. Yeah.
the major thing, trust but verify, it's always good, but you have to follow what it says. Trust but verify, because even if it's verified by other people, you have to do your own work.
Okay.
Small example, even if the, let's say, seller verify the occupancy, let's say 100% occupancy.
Hmm.
The day you moved in, you close on the property, we realize that it's 70% vacant.
Wow. Yeah.
Even the seller verify that. So you have to do your due diligence
Yeah. Make sure
diligently.
you, yeah,
Diligently.
diligently. Okay. Yeah. Trust, but verify and then re-verify it. Very good.
Verify. Yeah.
So we've talked a little bit about the importance of working with investors. This is how you and your partners are able to grow Veles Holdings and get into more apartment buildings. How do you think about your relationship with your investors? So in other words, yes, people invest with you guys to get an above average return on their money, but what else is it? What else do they get by working with you beyond just the returns, Roman?
Number one, every investor should feel comfortable working with us.
Hmm.
What does it mean to me and to our team? We cannot accept investors who is playing with the money as a lost source. So you cannot take lost $50,000 from investors. We will refuse to
Right.
do that, because the people who gaming, it's not the people who consider to have a name as investors. So
Right.
so people should
You
understand.
want to be working with accredited type people, folks that high income, high net worth type folks. Is that
The
correct?
people who have money to spend, and people who understand that they put in money not in the bank but in the business.
Hmm.
And the one of the bad part, not bad part, it's of the real estate is liquidity. It's
Right.
not like stock market, a bank. You cannot call us and say, Roman, I need my 50,000 back in 2 weeks. It's not going to happen. So they should realize that. And once they feel comfortable with this idea, the second idea, they should trust us. I can present any project, beautiful project, but if people isn't, if we didn't develop trust in investors, nobody will work with us. And that's what we treasure. And we absolutely transparent. We have no problems giving any reference to any of our investors or any our properties managements, any one of that. That makes us different because we're not hiding anything. We showing good and bad parts of it, and we keeping track of what we're doing, and we keeping relationship with investors by way of quarterly meetings, exchange of emails, and answering on any phone calls 24/7.
Yeah, so that's a good point because with any kind of investment or any kind of deals, there's ups and there's downs sometimes. What does that look like when things aren't going 100% according to plan? How do you keep in touch and keep your investors abreast of those kind of
Uh,
situations?
it's a key point when you're talking about bad part. The bad part is so-called capital call when the property doesn't perform the way you want it, and you don't have enough funds to cover expenses, and you have to make the call to your investors instead of giving them money, asking them for extra fund to cover expenses. Nobody wants to hear that phone calls. Nobody
Yeah.
wants to do capital call. I'm proud to say that we never ever had that capital call with our investors.
Mhm.
When it comes to putting extra money, we are putting our own money into the deal.
Okay, that's important. That's a big differentiator as well.
And
So,
everyone knows that we put in our money and we're not asking for any funds.
so there's several things that I'm hearing there, Roman. Number one is you're looking for working with investors that they're not investing their last dime in this deal because they understand that this is a medium term investment. It's not a quick flip kind of thing. But that's part of the way that you're able to get those superior returns is by holding on to the property for a while to really kind of get all of the squeeze all the juice that you can out of it for you and your investors. Communication is super important. You want to work with people that you can communicate with well, but who are not looking to micromanage you guys. They're trusting you to be the operators. They're trusting you guys to make the calls there. You're keeping in touch with regular reporting. You're always available, but you want them to be comfortable and confident investing with you and the team. It's not just Roman, it's you and your entire team. Yeah, very, very good. Okay. Good stuff. And then, yeah, the other big thing is you haven't had any, to date, you haven't had any capital calls because if something comes up, you and your partners take care of it and your investors don't get bothered with that.
Yeah.
Correct?
Yeah,
Okay.
and we're talking about substantial amount of money that we're putting in. So we're always showing our skin in the games anyway.
So, Roman, as we're kind of wrapping things up, where do you see Veles Holdings going over the next 3 to 5 years? What are your goals and aspirations for the company?
Even I'm not as young as I might be, but we still hungry for new properties, new acquisitions. We're exploring new markets all the time. We're exploring also new asset types, such as self-storage facility and RV parks. That's our interest as well in different states, and we're partnering with different people in exploring all opportunities. We didn't get anything yet, but we're actively looking for that. And
You're looking for them. You're analyzing those kind of properties. So, okay,
right.
very
So
cool.
we're diversifying our portfolio, and we basically getting pool of people, pool of trusted investors that we can work with. And
Right.
that's the idea of doing this business and scaling it up. We need to have a lot of new relationship, a lot of new team members, a lot of people who will be working with us. And ideally, the investors should call us and ask us, Roman, do you have any new properties so I can invest money? That's the in the scope of this. It's the shortest version of relationship.
So, speaking of investors, who are like the ideal people that you really enjoy working with as your investor partners?
Uh, I would love to say that everyone, but it's all different.
Yeah,
It's
yeah,
all different. We're also selecting our investors as well. We cannot work with everyone.
exactly. So, who can you work with, Roman?
Uh, Professional people who understand the business, not
Hmm.
understand the real estate business, but understand business in general.
Right.
People who have like accredited investors, like you said, basically those people already have established some kind of relationship, and they
Yeah.
know they already have their own expectations, so they're not new. We are willing to teach anyone anything that they want to learn in this business, because it's a lot of things that you can learn if you
Yeah.
like it. And mostly the people who are serious about investment, people who are serious about their own investment strategies, about their own faith, about their own future, not to make quick dollar today, but
Right.
to put money into the safe and reliable investment.
Okay. So it sounds like your ideal investor is a busy professional who's successful at what they do. They like the idea of the superior returns that can come through investing in apartment buildings. They don't necessarily want to do it themselves. They want to work with somebody who's got an experience and a track record. And they've got the financial wherewithal to do this and not need to get their money back the day after tomorrow, but understand that it's going to build and grow over time, generate much better returns by being in the deal versus going in and out. Is that fair to say?
In essence, you outlined perfectly the perfect situation, what we want to do and what we're doing.
Perfect. So, how can people connect with you and find out more, Roman?
They can either go and set up the calls with us through velesholdings.com. That's our website.
Hmm.
Or I can give my direct number. They can call me directly. My direct
Sure. So
number
they
is
can go to what is it? Veles Is that the website?
velesholdings.com, right? That's the,
Okay. And the phone number, if you'd like to share that?
I can share that. It's 917-601-7768. I'm good in answering any text messages. I'm returning the missing calls 24/7.
Very good. Hey, Roman, thanks so much for sharing your experience on the show. This has been great.
Thank you for having me. Thanks a lot.
All right, everybody. Thanks for tuning in, and we will see you on the next one.
Thanks for listening to the New York Professional Spotlight. If you're a successful New York professional with insights to share, visit nyprofessionalspotlight.com/guest and apply to be featured on the show.